Are you ready to become a better investor? My name's Andrew Stotts of A Stotts Investment Research, and today I'm going to present to you my India Equity FVMR Snapshot, or what I like to call India in your hands, every week. When you sign up for this snapshot, you'll always be up to date because every week you'll receive this updated India Equity FVMR Snapshot. You're going to know all the numbers. Why? Because this one page covers fundamentals, valuation, momentum, and risk, or what I like to call FVMR. You're going to be professional. You're going to use the same information as institutional investors and fund managers use. And most importantly, you're going to do nothing. Oh, that's the best part. Because after signing up, you're going to receive a one-page PDF every Monday morning. So let's get started and look at FVMR and start with fundamentals. If we look at the fundamentals of India, what we can see is the ROE of the country is at 15% compared to about 12% for the world. So a good, healthy return premium. And if we look at some of the sectors, we can see consumer staples sectors is the highest returning sector of all. The dividend payout ratio is much lower than the rest of the world, and that's mainly because it's a fast-growing and a highly profitable economy, so it probably makes little sense for these companies to pay out their dividends to then put the proceeds into a bank. Doesn't make sense. So we can see that some sectors such as consumer staples, which is making so much money, is paying out a pretty massive 55% dividend payout ratio. Let's talk about valuation. Next, we can see that the PE of India is only slightly higher than the rest of the world. So you get a good fundamental premium and a tiny PE premium. We can see some sectors are very cheap, such as energy sector, but of course we know energy tends to be very cyclical. And consumer staples, which we've talked about as a very profitable sector, is an expensive sector too at 27 times. But that's expensive across the world at this point. Now, the price to book of India is also at a slight premium at 2.3 times versus 1.8 for the world. And we can see some sectors, such as energy, are very cheap. Another sector that looks very cheap is the utility sector. And if we look on, we can also see the consumer staples sector is trading at almost 10 times price to book. That's a very, very pricey price to book. But if the returns are there, it could be sustained. Now let's look at momentum in both earnings and price. The momentum of earnings is very strong in India relative to the rest of the world. And we can see some sectors where it's strong, such as materials, and some sectors where it's weak, such as telecoms. Now, price movement has been about in line with the rest of the world over the last year. And so what we can see is that the decline in price has made India a little bit cheaper, and since fundamentals are strong, there's a good opportunity there. And we can see that price momentum in some of the areas, such as tech, has recently, over the last 2 weeks, been coming down. And the telecom sector over the last year has had a massive fall of 27% in price. Let's continue on to risk to understand the balance sheet and price risk of the companies. And what we can see is that the gearing in India is quite high at about 75% or so, relative to about 55 or 50% in the world. Some sectors such as industrials are massively geared. Usually this is because there is some distress in the industry. And we've got some companies such as the asset-light infotech companies that tend to not have a lot of assets, and therefore they have a lot of cash on their balance sheet and they don't have debt. We can see that right here with the negative number. And then telecoms and utilities tend to be highly leveraged in India. That's much different than the rest of the world, where they have a lot less leverage. And if we look at price volatility, we can see that India's price volatility is about in line with the world volatility. Comparing a country's volatility to the world is a little bit distorting because a country has a lot less components in it. So I would say that the volatility of India looks very good. There are some volatile sectors such as the financial sector, and there's some low volatility sectors such as consumer staples. So that wraps it up. If you sign up, you will always be up to date. You'll know all the numbers. You're going to be professional. Most important, you do nothing. You just go to the website, Become a Better Investor Now at babinow.com/FVMR-snapshots if you aren't already there. Have a great day.